Friends, welcome back to our channel OMSAI Bhojanapalli.
Let's start with the sharp single index model. Listen here. Okay, please. We are doing the chapter portfolio theories, in which we wanted to discuss risk return profile, Markowitz, CAPM, sharp single index model, APT. These are the 5 main theories in the portfolio, and miscellaneous area is called as what? Efficient market hypothesis. Settle down. I want silence, please. In which we have completed risk return profile, Markowitz. From Markowitz, we discuss about CAL, capital allocation line. From there, we saw how CML came. From there, we saw how SML also came. All this we discussed elaborately. CAPM itself, inside that various issues were discussed. The beta calculation problems. We discussed about underpricing, overpricing as a identification. The concept of levered beta, unlevered beta, proxy beta concept, portfolio betas. CAPM itself is an area in which we have done so many problems elaborately. Okay, now we come to the next area called as sharp single index model. Okay, the person who gave CAPM only has given sharp single index model also. Okay, it gives you another approach to the portfolio management. We had so many lines, CAL, capital allocation line, then CML, capital market line, then SML, security market line. We'll see one more line here called as CML, characteristic market line, which uses regression analysis for understanding the beta concept, and then develops further to analyze, discuss systematic and unsystematic risk. Actually, it is first sharp index, and then only came what? CAPM. CAPM is much more simpler. The sharp index complex concepts is made what? Simpler in CAPM. I did not discuss sharp index earlier because it may sometimes be too heavy for us to discuss it. Hence I completed CAPM and then came back to sharp single index model. It should be other way around. Markowitz then gave us to what? CAL, then we became what? CML, and then became what? Sharp single index, and then only have to come back to the CAPM. There's an order change for convenience in discussion in the classroom. Can I proceed or not? Now let us start with the discussion regarding sharp single index model. Let's write the learning objectives and then start our discussion. Write on. Short single index model. This is a separate chapter in most of the, that is textbooks. Okay, CFA and all, this becomes what? A separate chapter in itself. Okay, sharp single index model. We'll discuss everything in that chapter with the help of 3 problems in a summarized way. Okay, sharp single index model. Learning objectives. Learning objectives. Number 1. Point number 1. Understanding beta using, point number 1, understanding beta using regression analysis. Understanding beta using regression analysis. Understanding beta using regression analysis. Point number 2. Characteristic market line. Characteristic market line. Bracket la CML. Now there are 2 CMLs. What 2 CMLs? Capital market line. Now this is what? Characteristic market line. Characteristic market line. Bracket right what? CML. Bracket close. Point number 2 or 3? 3. Point number 3. Understanding. Point number 3. Understanding correlation, regression, correlation, regression, and standard error. Understanding correlation, regression and standard error. Correlation, regression and standard error. ERROR. Error na mistake. Yes or no? Understanding correlation, regression and standard error. Point number 3 or 4? 4. Point number 4. Analyzing security risk into systematic and unsystematic risk. Analyzing security risk into systematic and unsystematic risk. Analyzing security risk into systematic and unsystematic risk. Last but one point. Point number 4 or 5? 5. Point number 5. Coefficient of determination. Point number 5. Coefficient of determination. Coefficient of determination. Coefficient of determination. Last point. Point number 6. Portfolio risk. Portfolio risk as per sharp single index model. Portfolio risk as per sharp single index model. Portfolio risk as per sharp single index model. As per sharp single index model. Okay. Now, these are all the areas we'll be covering in this particular chapter. Can I proceed or not? Now, we will discuss most of them using the first sum. The sum which I am going to discuss is a study material problem. Don't think I am discussing something out of syllabus. It's a study material problem. Recently, they have started asking questions from this area. 3 attempts there was question from this sharp single index model, and questions are very decent questions, little bit difficult also, and exam question are given in the practice segment. I given the practice segment the exam problem along with the solution. But the depth in which we will be discussing, the questions can be easily understood and answered. But one should discuss in full detail the entire area called a sharp single index model. Now, one last time, we are going to use statistics, okay? Because portfolio chapter should be having statistics usage. We cannot escape that. I try to explain the DSA concepts as primitive as possible in the lowest say common denominator terms, and I am just doing it elaborately. No need to worry, just to concentrate, because sometimes in the subject mathematics or statistics cannot be escaped even if you want to. Are you following or not? So that is why we have to discuss this concept much more detail. It won't take for me so much time to discuss sharp single index model alone. But the problem is, I have to also teach you what meaning of regression and other issues. That is why it may take some longer time to complete. But understand that it is now becoming a very repeatedly asked area in the examination. This particular concept called a sharp single index model. Can we start or not? Now, let's start with our discussion through a question. Please take question number 39. Take question number 39. Which chapter? Portfolio. Don't search in capital budgeting. Take question number 39 in portfolio. Okay. You will do it. Yeah. Can I proceed? No. Shh. This in fact is a study material problem. In the new study material, this concept was included and the problem has been discussed. Okay. Now, year 2002, 2003, 2004 and 2005. Please stop talking. There is a company called as JK Limited. Please. Share price given for those years and dividend per share also given. Index, market index is given and dividend yield in the market also given. Return on Government of India bonds given, that is what return? Risk-free return. Compute the beta value of the company at the end of 2005. What is the company's beta at the end of 2005? Okay, that is a question. We'll extend the question to also discuss about characteristic market line and then systematic and unsystematic risk. The question can stand extended. That's also right. Also, in the question included, also find out the CML, also find out the CML for this security. Also find out the characteristic market line CML for this security, and analyze the security variance into systematic and unsystematic risk. And analyze the security variance into systematic and unsystematic risk. Analyze the security variance into systematic and unsystematic risk. Okay. Can I proceed or not? Now, see, we are looking at two asset categories. One is a particular company share. What is the share called? JK Limited. And there is a market portfolio. There is also another investment called as what? Market portfolio. And both market portfolio and JK Limited share will give us a return. Yes or no? Yes or no? Now, what is the return of a JK Limited share? Tell me, what is the return per annum for a given share? Year-end price minus year beginning price plus dividend divided by year beginning price. Like that, I can find out JK Limited return for the number of years given in the question. Right or not? Similarly, market also, the return is year-end price minus year beginning price divided by year beginning price plus the dividend yield. Right or not? But the question is, sir, in the market portfolio, how to know the price of that portfolio? How to know what price of that portfolio? Because in India, a Sensex shares, 30 shares will be there or not. If you look at the multiply capitalization, it may runs in thousands of crores or lakhs of crore rupees. Yes or no? In the case, how to manage a price movement? It is represented through what? Index. How a particular share can have a price like that? The market is having a price called as what? Index. The index movement only is the capital gain or capital loss from the market. Respond yes or no, which we discuss even during the CML. I'll discuss once again along with the notes during the futures chapter later. But understand that a single share price can go up, come down. But for a market portfolio, the portfolio value can go up as well as what? Come down. What captures the going up and coming down of a market portfolio? The index. The index only measures the movement of the market portfolio up and down. Yes or no? How a share is having a share price, a market portfolio having what? An index price. That's all. Everybody following not? Now, plus the dividend will be published by the stock exchange itself. But how to calculate this if you want, we'll discuss in the futures chapter later. Everybody following not? Because I don't want to put too many things into the portfolio. This dividend will assume that question will give you and then proceed with the further discussion. Can we start or not? Now, first of all, I am now going to find out what return. This is past or future? Past. All this data has happened. I am now going to find out what return JK Limited share and the market portfolio has given in the year 2003, 2004, 2002, 2003, 2003, 2004, 2004, 2005. Don't say why not 2001, 2002, because I don't know at what price I bought at what? 2001. The detail is not given. Enough right or not? So tell me, I want to know the return of the share for the past 3 years. So how many years here? Past 3 years. What two past 3 years here? 2002, 2003, 2003, 2004 and 2004, 2005. Just for the sake of understanding, tell me, then I start putting the numbers in the slide. 2003 to 2002, 2003. Tell me, you are an investor in JK Limited. Invest in what? JK Limited. You bought the share at what price? Now the share is selling how much price? 279. Are you making a capital gain or not? Yes. How much rupees here? Some number. You're going to make a capital gain of some number. Plus what? Dividend. Divided by what? Opening price will give you the answer. Respond. Yes or no? Like that I can find out for the remaining. But for the market, instead of comparing price, I compare what? Index movement to find out the capital gain or capital loss. Is the first discussion which has been already known to us. Can you proceed or not? Can we start calculating the data or not? Now. Can we do it together? Now. Let's do some steps together. First, right? Return from the security. Step 1. Return from the security for return from the security for the past 3 years. Return from the security for the past 3 years. Return from the security for the past 3 years. We need not hurry, but every step you should understand and do it. You should not say, let this be over, let me just wait for the next concept. You should be involving yourself. If you don't understand, want me to repeat, I'll repeat, not an issue. Can I proceed? No. First year, what is the first year? 2002, 2003, 2003, 2004, 2004, 2005. Okay, computation. In 2003, 2002, 2003, I bought the share at what price? 242. Now I can sell it how much price? 279. What are this dividend of this year 2003? 25. Don't say 2020 is a previous one. This is 2003 and how much on dividend here? 25. Tell me the calculation. 25 plus dividend plus 279 minus 242. P1 minus P0. 279 minus 242 whole divided by 242 whole divided by 242 whole divided by 242. I want you to be busy. You should calculate and tell me how much percentage here? 25 plus some number by 242. What is the number? 25.62%. 25.62%. Please do and then write. They will be giving you an involvement into the numbers and question. Can I proceed or not? Now. Next. 2003, 2004. 2003, 2004. What is the price at the end of 2004? 305. What is the end of 2003? 279. Tell me the capital gain is a difference plus a dividend of 30 rupees. Please tell me the calculation. 30 plus 305 minus 279. 30 plus 305 minus 279 whole divided by 279. I want the return percentage. So what the percentage return going to get? 20.07 percentage. Return percentage is 20.07 percentage. Third year, 322 minus 305 plus, what is the dividend? 35. 322 minus 305 plus 35 whole divided by 305. 322 minus 305 plus 35 whole divided by 305. I want the percentage return. What is return? 17.07. Return is 17.05. Return is 17.05. Now, past 3 years, first year the shareholder got a return of 25.62 from the share. Second year 20.07 and third year 17.05. This is how the share has performed over the past 3 years. Respond, yes or no? If you remember, I asked you to do this for Axis Bank share, right, Amma? Yes, anybody tried? Okay, can I proceed? Now. No need to have further discussion now. Return from market, please. Shh. Return from market. Step 2, return from market. How the share, individual share can give you a return for the past 3 years? The market portfolio, nothing but what? Combination of shares. The portfolio of shares in market also can give you what? Return. But the portfolio price movement is captured through what? The index movement. That's the only change. Respond, yes or no? Now, next is return from market. Here, computation, return. Here, computation and return. Can we start? Tell me what the first year 2002, 2003. Please write along with me. 2002, 2003. 2003, 2004. 2004, 2005. Dividend not given in amount, they can straight away as what? Yield. So I can add it to the capital gain percentage. Remember, right or not? Now, tell me, first year. How to compute what minus what? 1950 minus 1812 divided by what? 1812 plus how much percent? 5%. In a 5%, yeah. Now, right or not? See, ரொம்ப simple here. 2002 dividend is what? 4%. Yes or no? Now, understand that at the end of 2003, the share is trading at what? 279. At the beginning of 2003, which I call as what? 2002. I can say share is trading how much percentage here? 242. In a right or not? In that case, I am having this price or not? Like that. This is the yield given in 2002. I am now calculating the yield for what? 2003. Respond, are you following? I am going to find out yield for what? 2003 predominantly. It is how much percentage? 5% because this is 2002, 2003 yield, 2003, 2004 yield, 2004, 2005 yield. Last 3 years, yeah. Previous year, second previous year, third previous year. This 4% yield I can take, but I don't know the price at the beginning of that particular period to calculate the capital gain. Hence the fourth year was not taken. Are you following what I am saying? They have given you the yield for the last 4 years, but I cannot find out capital gain for what? Last 4 years because at the 2002, 242 price, what was the beginning price? I don't know at what price. Since I could not find out capital gain, I just what? Ignore the first row. I used it only to take this one 242 for calculating for this 279. Yes or no? Now, gain is booked from 279 to what? 242. That means the return should be what? This 5% only at 25 that should be taken. Right or not? The doubt. No. Difficult to teach. You are not responding. Okay. Now, very simple. Forget 2002 and that. I ask you, what is the year beginning price? 242. What is the year end price? Capital gain is between 279 minus 242. Accepted? Yes, that means this is the current year. From 240 to 279, current year the price has increased. Yes or no? Current year the dividend is what? 25. Ennappa, right or not? And that is The company has paid 25 rupees dividend in this year and the price has reached what? 279 at the end of this year. Enna correct? This is through this year. This is what like a P&L. This is like what a balance sheet. What I am saying, in that case, dividend is how much received? 25 during this year. And what was the price at the end of the year? 279. At what price I bought? 242. Respond yes or no. If you understand for this 25, the same logic for this one, 5% also. Am I right or not? Now, this dividend is earned. I don't deny it. In the year 2002, the price became how much? 242. It gave a dividend how much rupees? 20. But at what price I bought that share, they did not give me. Yes or no? In that case, I am not able to calculate the capital gains for what? The first year. That is why I ignore this first year. I calculate return only for what? Second, third and fourth year. Can I proceed further? Now, that's how one should be understanding it. Can I proceed further? Now. First, the percentage is 12.62%. 12.62%. I want an answer. Next, what is the capital gains here? What is the capital gain? 2258 minus 1950 divided by 1950 plus 6%. 2258 minus 1950 divided by 1950 plus 6%. What is the percentage here? 21.79%. 21.79%. Next. Third case. Tell me the calculation. What is the calculation? 2220 minus 2258 divided by 2258 plus 7%. I think I have a capital loss or not. What is the number here? 5.32%. The return from the market is 5.32%. 5.32%. Tell me. This is a return from a single security. A portfolio of security is a portfolio. This is called what portfolio? Market portfolio. What it is, we discussed in CML itself earlier. Yes or no? We saw that no efficiency frontier will become what? CAL. Then everybody starts investing in what? CAL. And assumption is that all investors have the same information about the market. Then all invest in the entire market portfolio. The market portfolio return is measured through what? The dividend declared by the shares inside the portfolio as well as what? The index movement is what has been calculated. Respond yes or no. Do you know understand what the market portfolio means? The market portfolio definition is same in capital market line, SML as well as what? Sharp index model. All these are called as market based models. Everybody, are you following what I am saying? Can I proceed further? Now, see, now I have two sets of data. I know how a particular company has performed. I also know how the entire market has performed. Respond yes or no. So I know the past performance of a company as well as what? Market. I took a data for how many years here? 3 years. Can I proceed? Now, so before I proceed, let me put it in a formal way in the sheet and then I proceed further. See, I am now wanting to establish a relationship between the market and company. Okay. Two data relationship can be expressed as a straight line. Can be expressed as what? Straight line. What is the equation of a straight line? Y is equal to mx plus c. Y is equal to what? Mx plus c. Before that, if you draw a graph, I have an x-axis, I have one y-axis. Now, see, what we understand is, y-axis represents security, x-axis represents what? The market. For a given market return, what is the security return? For example, first year, the market return was 12.62 and the share return may be how much percentage here? 20. I'll be having a point here is nothing but what? 12.62 and then what? 25.62. I want to plot points where x-axis represents what? Market return and y-axis represents what? Security return. Can I proceed or not? The question is, why sir we should have x-axis as market and y-axis as what? Security. Why can't we have x-axis as what? Security and y-axis as market? Is the second issue, one should be knowing it. Yes or no? I define market as x-axis and y-axis as what? As security. Very simple. What is influencing is x-axis. What is getting influence is y-axis. For example, units is that, cost is that. We have a cost function, no? We have a function called as y is equal to mx plus c, where y is the total cost, M is what? Variable cost per unit. X is what? Units. And C is called as what? Fixed cost. Like that we have a function, cost function. Now tell me, there are two variables, total cost and then what? Units. Units depend on cost or cost depend on units? Cost depend on units. More the units, more the cost. Less the unit, less the cost. We have one base, and with that base we move on another number. The number which is influencing will be in what axis? X axis. The number which is getting influence will be in what axis here? Y axis. Ennappa, right or not? Yes or no? In that case, now what we say is, security return is getting influenced due to what? The market return. When the market moves up and down, the share inside the market also what? Moves up and down. When the economy does not perform well, the shares also doesn't perform well. When there is a boom in the economy, every share is what? Performing well. So when the market moves up and down, the share price also what? Moves up and down. Performance of a company depends on the performance of the market in which the company is say there. Are you following what I am saying? No. So in that case, what is influencing market? What is getting influenced? A particular security. So x-axis you put it as what? Market. And y-axis you put it as what? Security. Right or not? No. There was a counter question. I'll put it, but I cannot answer now. I'll answer that APT later. Okay. That is the question is, they ask a question. See, market portfolio is that. So what is market portfolio? It consists of number of shares. It consists of number of shares. If all the security perform well, the market performs well. The security does not perform well, market does not perform well. So security return only influences what? The portfolio return, and not the other way around. A question may be asked. There is a very valid answer for that question. This is only right. We have to see what market movement really means in the APT, where I discuss about the macroeconomic factors. Are you following what I am saying? So don't think that way, that what I said second way is a wrong way to think. We'll tell why it is wrong in the later stage, but understand that when the market performs well, security performs well. When the market does not perform well, security does not perform well. So because share is inside the market, share is what? Inside market. Very simple here. If the country is doing good, I will also be good. Yes or no? The country is not prosperous, I will not also be what? Prosperous. That's a right way of thinking the entire market say hypothesis. In that case, market performance is what? The influencer, and the security performance is what? The influence. Hence I put x-axis as what? Market, and y-axis as what? Security. Point number one. Everybody accepting it or not? Now, so tell me, in this particular case, I want to write the numbers here, x, and then what? Y. It is you who should be telling me here x and y. Here I will write 1, 2, 3. That is 2002, 2003, 3, 4 and 4, 5. I wrote as what? Here 1, 2 and 3. X. Let me check whether you are telling x correctly or not. X, tell me the percentage here. 12.62. Next is what? 21.79. Third is what? 5.32. So x represents what? Market. Now these are all the market return, which is called as what axis? X axis. Now y axis represents what return? Security return. Tell me what is security return? 25.62. Next is what? 20.07%. 17.05%. Now see. When the market return is 12.62, security gives you 25.62. When market jumps up to 21.79, security becomes what? 20.07. Market drops to 5.32, security is having what? 17.05. Now, we are now going to establish a relationship between how the market and security behaves together. How they behave what? Together. Using the concept called as beta. What is the beta? Beta means what? The change in the security return in relation to what? Change in market return. So we are now mainly going to discuss about the concept of what? Beta in depth. Are you following what I am saying? Already we know about beta and its calculation. We are going to visualize further really what the real meaning of a beta calculation. But I will go from known and then enter into what? The unknown territory. Can I put or not? Already we know three formulas for calculating beta. Tell me three formula. Change in security return divided by change in market return. Second is what? Sigma S divided by sigma M into correlation of security and market. Third is what? Covariance of security and market divided by sigma M the whole square, or variance of the market the whole square. Yes or no? No. Let us calculate beta from one of the known formulas. So we'll be having a connection about the later number calculator, because otherwise you may think all are different. All formulas will give you what? Same number only. Let's start with the known way. Covariance of security and market divided by what? Variance of market. Using that, let me calculate what? Beta. Once I complete that, I'll give you 3 more ways of calculating what? Beta. In this 2 will be formula, and the third will be a regression analysis method, which in turn gives a derivation of the above 2 formulas. Are you following what I am saying? So now we are going to discuss purely about what? Beta calculation. Let's calculate beta once using the known formula before we go for what? Unknown formulas for calculating the beta. Can I start or not? No. So now tell me, what is beta? What is beta? Covariance of security and market. Inga security is what? Y. Market is what? X. Covariance of Y and X divided by what? Sigma X the whole square. Now market is what? X axis. Understand that M is replaced by what? X. S is replaced by what? Y. I think all able to remember or not? Can we start doing the problem set together? Next. Now this is security return and market return. Write down. Step 2 or step 3? Step 3. Summary of the above data. Step 3, summary of the above data. Summary of the above data. 3 columns. Here, X. In bracket write what is X? Market return. X market return. And then Y. In bracket write security return. X market return and Y security return. Okay, year 2000, that is year what? 1, 2, 3, can have it as not? 1, 2, 3. Year 1, 2, 3. We just replace by 2002, 2003 by what? Year 1 and so on. Past 3 years now. 1, 2, 3. Market return is 12.62%, 21.79%, 5.32%. 12.62%. 21.79%, 5.32%. Security return 25.62%, 20.07%, 17.05%. 25.62%, 20.07%, 17.05% security return. That is Y axis. Can we proceed or not? No. Step 2 or step 3? Step 4. Calculation of beta. Calculation of beta. Calculation of beta. Okay. Can we do it together or not? No. Okay. Have the following columns. Year and then 6 columns. Year and then 6 columns. Year, first is X. X axis means what? Market. Y. Y is security. X minus X bar. Y minus Y bar. What is 3 into 4? X minus X bar into Y minus Y bar. Why you want that multiply number? Covariance calculation. Yes or no? Next, 3 squared means X minus X bar the whole square. Why you squared X minus X bar whole square? To find out the standard deviation of the market portfolio. Right or not? No. Are you applying your mind and understanding and writing or not? Don't get lost in any calculation. Please be alert slide by slide. Now, everything frame by frame understand. Now you should understand what we are doing in this slide. Everybody yes or no? Now tell me the year 1, 2, 3. 1, 2, 3. Tell and write. What is the return of the security? Is the return of the market 1, 2, 3 days? 12.62. 12.62. 21.79. 5.32. 21.79, 5.32. If I add, what the total return of the market? 39.73. 39.73. Can you tell me what is this 39.73? Sigma x. We call as what? The sigma na E mari podamba, because always, yesterday also one student notebook I got Xerox, there was sigma like this. Okay, there are 2 sigmas. Now, on the day also again a doubt was asked. Horrible, yeah. Now, this is also called as sigma. This is also called as what? Sigma. Yes or no? Now, both English word is what? Sigma only. This is meaning what? Standard deviation. This means what? Summation. That everybody able to understand it or not? Those are any doubt regarding this, raise your hand. Now, 2 classes ago, I was asked this doubt. I was having heart attack. Can I proceed? Now I came back from ICU. Can I proceed? No. And when I speak, we have to contextually understand which sigma I am using. Whether I am using the standard deviation sigma or what? The summation sigma. Enna parayda? Now. What is 39.73? Sigma x. That means what? Total of x. Now, next. Y. Tell me what is y security? 25.62, 25.62, 20.07, 17.05. 25.62, 20.07, 17.05. Gives you what's the total? 62.74. 62.74. What is 62.74? Sigma y. There is something about what? Sigma y. We should understand it. Can I proceed? Now. X minus x bar. Now you should tell me what is x bar here. Tell me x bar is equal to, you want to write below that, x bar is equal to, write the calculation, x bar is equal to 39.73 divided by 3. X bar is equal to 39.73 divided by 3. What is x bar? 13.24. X bar is equal to 13.24. Like that, tell me y bar is equal to 62.74 divided by 3. Write in the note below. 62.74 divided by 3 is equal to how much? 20.91. Y bar is 20.91. X bar is 13.24. Y bar is what? 20.91. Everybody, have you all written this or not? Now, let's go back to the main slide. X minus x bar. Okay. It is 12.62 minus 13.24. I want a number. What is the number here? Minus 0.62. 12.62 minus 13.24 minus 0.62. 21.79 minus 13.24. 8.55. 8.55. Is the sign important or not important? Important. Why it is important? For covariance. Can I say? Next. 5.32 minus 13.24 minus 7.92. Minus 7.92. If we add x minus x bar, the total, it should be what? 0. But there is 1 or 2 decimal changes that you ignore it. It should be obviously what? 0. Next. Y minus y bar. It is 25.62 minus 20.91. 25.62 minus 20.91. Answer 4.71. 4.71. 20.07 minus 20.91. What is the number? Minus 0.84. Minus 0.84. 17.05 minus 20.91. What is the number? Minus 3.86. Minus 3.86. Obviously, the total should be what? 0. That 1 or 2 decimal changes ignore due to rounding off. Can I proceed? Now, 3 into 4 is x minus x bar into what? Y minus y bar. Minus 0.62 into 4.71. Tell me the multiplier number. Minus 2.92. Minus 0.62 into 4.71. Minus 2.92. 8.55 into minus 0.84 gives you minus 7.18. Minus 7.18. Minus 7.92 into minus 3.86 give you plus number now. What the number? 30.57. Is 30.57. If a total, it is going to be 20.47. Total is 20.47. I want to answer me. What is 20.47? Sigma xy. Sigma x minus x bar into y minus y bar. Next. 3 squared, na? That column 3 whole square. Minus 0.62 the whole square. Minus 0.62 into minus 0.62. The number is how much? 0.3844. 0.3844. Next, 0.84 minus 8.55 into 8.55, 73.10, 73.10. Third is what here? 7.92 into 7.92, 62.73, 62.73, 62.73. Please tell me the number is how much? 136.21. Number is 136.21. 136.21. What is 136.21? Sigma x minus x bar the whole square. Everybody, are you following or not? Now, please listen here. Okay. Answer my question. Beta is equal to, tell me the formula. Covariance of security and market. Security is y, market is what? X. Divided by standard deviation of market is what? X. The whole square. He is going to give me the beta. Yes or no? Covariance of security is y, market is x divided by sigma x the whole square. Now, can I simplify it? What is covariance? Sigma x minus x bar into y minus y bar divided by n. Divided by, what is sigma x the whole square here? Sigma x minus x bar the whole square divided by n. Square root goes out because sigma x square becomes what? Square root vanishes. Yes or no? Now, the n becomes here and gets what? Cancel. Can simply say sigma x minus x bar into y minus y bar divided by what? Sigma x minus x bar the whole square gives you the beta number. Ennappa, right or not? Yes or no? Now, are you following up? Now, so continue. Beta is equal to, tell me, what is sigma x minus x bar into y minus y bar? 20.47. Substitute beta is equal to 20.47 divided by, what is sigma x minus x bar the whole square? 136.21. Beta is equal to 20.47 divided by 136.21. 20.47 divided by 136.21 is equal to how many times beta? 0.15 times. Beta is equal to 0.15 times. Beta is equal to 0.15 times. Beta is equal to 0.15 times. Now we use a formula unknown to us, known to us. Tell me, what is the formula used here? Covariance of security and market divided by the sigma market the whole square. Now if you want to write, note. Beta is equal to, just to understand this, beta is equal to covariance of y and x divided by, beta is equal to covariance of y and x divided by sigma x the whole square. Covariance of y and x divided by sigma x the whole square. Which is equal to, what is covariance? Sigma x minus x bar into 1 y minus y bar. Sigma x minus x bar into y minus y bar whole divided by n divided by sigma x minus x bar the whole squared by n. Divided by sigma x minus x bar the whole squared by n. N gets what? Cancelled. N gets cancelled. So that is what we have substituted now. That's what we have substituted now. Sigma x minus x bar into y minus y bar only we call as what? 20.47. And sigma x minus x bar the whole square we called as what? 136.21. I hope everybody understanding it or not now. See, again I repeat. Slowly when we get more and more calculation, we get overloaded with it. Every frame understand, consolidate, and then before I proceed what? Further. Till now, what we have done is anything new or everything is already known to us. What we did, we first found out the security return. How we found out security return? Year end price minus year beginning price plus dividend divided by year beginning price. I found out for the 3 years. Accepted? Second step, we found out what? Market return. Year end index minus year beginning index divided by year beginning index plus dividend yield gives you the market return. Point number 2. Over or not? Next. Point number 3, I said, call market return as x-axis and security return as what? Y-axis. We wrote the summary data. It is not. Why market is x-axis? What is influencing is x. What gets influenced is what? Y. Market influences a share return. Hence, market return put in the x-axis and share return put in what? Y-axis. We want to develop a relationship between the two. Respond, yes or no? The relationship is bound by a concept called as what? Beta. We calculate beta using an already known formula. What the known formula use? Covariance of security and market divided by variance of the market, or standard deviation of market the whole square. Here covariance of y and x divided by what? Sigma x the whole square. The n gets cancelled. Hence simply calculate beta as what? Sigma x minus x bar into y minus y bar divided by what? Sigma x minus x bar the whole square. Is what you have done in this sum till now. Respond yes or no. Those understood till now, raise your hand. Long way to go. It will be across 2 classes. Will be discussing. Please, frame by frame, we should be what? Understanding, so that we are having a clarity. Can I proceed to the next stage or not? Now, next. Now we are going to learn 3 more ways of calculating beta. 3 more ways of calculating beta. First 2 ways, I'll put the formula on what? Do it. And the last method, called as regression analysis method, only gave you the remaining 2 formula. We'll prove that also through derivation. Are you following what I'm saying? So now we're going to have how many more methods of calculating beta? 3 more methods of calculating beta. All are same only. Everything will give you what? The same beta value only. Can I proceed or not? Now. Okay, next. What I have dictated here? Step 1, step 2, step 3, step 4. Step 5, more formulas for calculating beta. More formulas for calculating beta. Step 5, more formulas for calculating beta. Okay, can you start or not? Now. Let's write the formula and then start the calculation. Write along with me. Beta is equal to, please. Beta is equal to sigma xy minus, beta is equal to sigma xy minus, sigma here means what? Summation. But sigma xy minus nx bar y bar, sigma xy minus nx bar y bar divided by sigma x squared divided by sigma x squared minus n x bar the whole square. The square is only for x bar, not for n. Be careful. Sigma xy minus nx bar y bar divided by sigma x squared minus nx bar the whole square. Nx bar the whole square. Now, x bar means what? Mean of x. Y bar means what? Mean of y. Average of x, average of y. We call as x bar and y bar. N means what? Number of data taken. That is going to be 3 years here. Respond. Are you following what I am saying? Now, there is one formula. Next formula. Beta is equal to, please. Beta is equal to n sigma xy minus, beta is equal to n sigma xy minus sigma x sigma y, n sigma xy minus sigma x into sigma y whole divided by n sigma x squared whole divided by n sigma x squared minus sigma x the whole square. N sigma x squared minus sigma x the whole square. This is the second formula for calculating the beta. These 2 formulas came from the third one, called as what? Least squares method or regression equation method. Everybody following or not? No. These 2 formulas, no other option, by heart. Okay. We can derive it later. These are the 2 formulas for calculating beta. Now, formula number 1 and then what? Formula number 2. Okay. Now, finish writing or not? I'll just give you 1 minute time, by heart. Now, please. We are going to go stage by stage, consolidate before I proceed, by heart. Now, very simple here. What is sigma xy? Multiply x and y totally. And what is sigma x square? Square x and then what? Total it. Sigma x the whole square, sigma x square, same or different? Different. This total of x squared, the x square total. Are you following what I am saying? So now please by heart the numbers before I proceed. The CPT max, you should pay fees for me for CPT specifically apart from MTH, right now. Fees is revision. Can I proceed now? Finished, done? Okay. Now, tell me, first formula, beta is equal to 1 by 1. First term is what? Sigma xy. Wait, yeah. I will ask you to tell, okay, 1 by 1. Kumbala Govinda Podada. Can I proceed now? Please. Stop. First, sigma xy minus next is what? N x bar y bar divided by sigma x square minus n x bar the whole square. Second formula, beta is equal to n sigma xy minus sigma x sigma y divided by n sigma x square minus sigma x the whole square. Respond. Are you following or not? Now, that means to apply the both formulas, I should have x, I should have y, I should have what? Xy, I should have what? X square, then x bar, y bar, and then all the totals required. Respond, yes or no? Can I proceed further? Now, before I proceed further, just no need to copy that, just to confirm that these two formulas are same only, because it has been once used in the RTP and suggested answer, one time this way, another time what? That way. Generally people get confused, so why so many formulas are calculating what? Beta. All the formulas are same formulas only. Can I proceed? Just this and this are what? Same. I'll just go for the first formula. Tell me what the first formula once again. Beta is equal to sigma xy minus n x bar y bar divided by sigma minus This is terrorism. Yeah, can I proceed? Making me confused. Can I proceed? No. Very simple. Please. What happens is sigma xy minus n. What is x bar? Sigma x by n. What is y bar? Sigma y by n. Whole divided by sigma x square minus n into sigma x the whole square divided by n square. Enna right or not? X bar the whole square. Are you having the clarity or not? No. What I do is I multiply numerator and denominator by n. The number will be same or not? If the numerator and denominator is multiplied by the same number, the resulting number also will be what? Same. I multiply the numerator and denominator by what? N. What happens here? N sigma xy minus n square. And n becomes what? N square. Sigma x, sigma y divided by this is what? N square. Whole divided by what? This is n sigma x square minus n square sigma x the whole square divided by n square. But not this n square gets cancelled. It gets what? Cancel. N sigma xy minus what? Sigma x sigma y divided by n sigma x squared minus sigma x the whole square. Both formulas literally what? Same only. Just I multiply by n naught. This is not a derivation. Yeah, only to understand both are same. This is derivation. Then others are all what? Can I proceed? Now. So, just to confirm that both formulas are what? Same. I just did it. But For both, these two formulas came from what? The least squares method or regression equation method later. That is the original form of calculating what? The beta. Can I proceed or not? Now. So can we go and start doing the numbers or not? Now. In your notebook, now we are writing step number 5. What are you writing? Till now what is written? Step number 5. What is the heading given? More formulas calculating beta. These two are calculated as a written or not? Now, same step 5. Let us continue and do the calculation. Okay. Now, let's continue with the step 5. In that, right? Computation table. Computation table. Please. Computation table. Open the following columns. Here, x, y, x squared. Here x, y and then x squared. X, y and then x squared. Can we start or not? Now. 1, 2, 3. Let's do it together. Here 1, 2 and then 3. You have the numbers with you. What is x? 12.62, 21.79, 5.32. What these three numbers are? Market return. These numbers are what? Market return. Why? What are the three y's having the past 3 years? 25.62, 20.07, 17.05. 25.62, 20.07, 17.05. X into y. Tell me what is the number? 323.32. Multiply 12.62 into 25.62 is 323.32. Please multiply and tell me 21.79 into 20.07. What is the multiplied number? 437.33. Decimal rounding off, leave it. 437.33. 5.32 into 17.05 gives you the number 90.71. 90.71. Next, x squared. X squared is 12.62 the whole square. What the number here is? 159.26. 159.26. Next, 21.79 squared. Tell me what is the number? 474.80. 474.80. 5.32 squared. What is the number? 28.30. 5.32 the whole square. 28.30. Total of every number. Tell me what is total of x? 39.73. Can tell me what is 39.73? Sigma x. The total of y is 62.74. Total of y is 62.74. Called as what? Sigma y. X into y. What is the x into y total? 851.36. Are you involving yourself for writing or not? 851.36. What is the 851.36? Sigma xy. Total of x square. Please everybody wait. Let everybody do. What is the number? 662.36. 662.3. Nothing but what? Sigma x square. Sigma x square. I hope everybody are you following or not? Now. Next, right? Summary of facts. This will be having, because I want to use these numbers left and right in future data, so I have everything in one place or not. Summary of facts. Summary of facts. This computation table, I hope you all have finished copying or not. Now, next is summary of facts. Okay. Let's write it together. You tell me one by one. Sigma x. Tell me the number. Sigma x is equal to how much? 39.73. 39.73. Next. Sigma y is equal to how much? 62.74. Now, write as it dictates 62.74. X bar is equal to, tell me, x bar is equal to how much? We calculated in the first area, no? So, it is 39.73 divided by 3. How many days? 13.24. X bar 13.24. Y bar is equal to 20.91. It is nothing but 62.74 divided by 3. Divided by 3. Can I proceed or not? Now, next is sigma xy. Tell me what is sigma xy? 851.36. 851.36. Next is what? Sigma x squared. What is sigma x squared? 662.36. 662.36. 62.36. N is obviously what? 3. N is equal to 3 in this case. N is equal to 3 in this case. Can I proceed or not? No. Sigma is the whole square. We can just say 39.7 the whole square there. Everybody yes or no? These are all the numbers we got from the various calculations or tables. Can we proceed or not? No. Let's substitute the numbers to calculate the beta using both the formulas. Can I proceed? No. Okay. Before we use, tell me the formulas for calculating beta. First formula, beta is equal to sigma xy minus nx bar y bar divided by sigma x squared minus nx bar the whole square. Second formula for calculating is what? N sigma xy minus sigma x sigma y divided by n sigma x squared minus sigma x the whole square. Everybody have the clarity or not? No. Write down. Beta is equal to, continue writing, same step number 5 we are doing, okay, beta is equal to sigma xy minus, write the formula and then substitute, sigma xy minus nx bar y bar. In the slide, I write the bar as a hyphen in the top, okay, sigma xy minus nx bar y bar divided by sigma x squared minus nx bar the whole square. You write as I written the sheet earlier to have a clarity. Okay, sigma x squared minus nx bar the whole square. Just copy from the earlier dictation. Can I proceed or not? Now, please you should tell me the substitution. Beta is equal to, tell me sigma xy. What is sigma xy? 851.36. Right? Then I'll put in the slide. 851.36 minus 3 into 13.24 into 20.91. 851.36 minus 3 into 13.24 into 20.91. Accept or not? Whole divided by, what is sigma x squared? Please tell me. 662.36. 662.36 minus 3 into what is sigma x the whole square here? 39.73 the, oh, x bar the whole square, na? 13.24 the whole square. 662.36 minus 3 into 13.24 the whole square. 3 into 13.24 the whole square. Everybody, are you following out? The square is only for 13.24 or not for what? 3. Okay, please. Everybody calculating it up? Okay. If I find out, I'll be getting beta as what? 0.15. Beta will be 0.15. Beta is equal to 0.15. Please. Beta is equal to 0.15. Have you all checked it in the calculator? Huh? Is calculator working properly or not? Formula is correct. That will not change. So calculator only should be correct or wrong. So is it working properly? No virus. Na? Can I say? No. Next. Beta is equal to, write once again another formula. Beta is equal to, please. Shh. Beta is equal to, tell me the formula. N sigma xy minus sigma x sigma y. N sigma xy minus sigma x sigma y divided by n sigma x squared minus sigma x the whole square. Divided by n sigma x squared minus sigma x the whole square. N sigma x squared minus sigma x the whole square. Can I proceed or not? Please substitute the numbers here. N sigma xy, tell me 3 into 851.36. 3 into 851.36 minus, what is sigma x and sigma y? 39.73 into 62.74. 3 into 851.36 minus 39.73 into 62.74. Whole divided by n into 3 into, what is sigma x squared here? 3 into 662.36 3 into 662.36 minus what is sigma x the whole square? 39.73 square. 3 into 662.36 minus 39.73 square. That's 39.73 square. Okay. If I simplify it, I should be getting what? 0.15 as beta. I will be getting beta is equal to 0.15. Are you writing or not? So beta is equal to 0.15. Beta is equal to 0.15. Okay. Stop writing. How many formulas you now know to calculate beta? 5 formulas. Now, tell me the 5 formulas here. Change in security return divided by change in market return. Second is what? Standard deviation of security divided by standard deviation of market into correlation of security and market. Next formula. Covariance of security and market divided by standard deviation of market the whole square or simply variance of market. Next is beta is equal to sigma xy minus nx bar y bar divided by sigma x square minus nx bar the whole square. Next is beta is equal to n sigma xy minus sigma x sigma y divided by n sigma x square minus sigma x the whole square. All this gives you what? The same beta. First formula alone ad hoc. Say change in security return divided by what? Change in market return. Apart from that, remaining formula should be giving what? Same beta. All the remaining 4 are accurate formulas for calculating the beta. Can I present or not? No. All this is having their origination to the concept called as what? Regression and correlation. So there is a last method for calculating beta called as what? Regression analysis method for calculating the beta. What it is will be discussing now, because on that basis only the entire CML concept is built around the standard error or the systematic unsystematic risk. Everything is built only around what? The correlation regression concept. So now let us have an understanding about that calculation. Then we can just go for the copying. Can I present or not? Let us start with the discussion now. Now write down step number 5 or 6. Write down step 6. Beta calculation using. Step 6. Beta calculation using regression method. 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 Okay. Let us understand what do you mean by regression and its relation with what? Correlation. Then we can just go for the beta discussion in the next stage, because visualization is very, very important. Okay, the scale irukappa. Small scale.
Thank you friends. OMSAI Bhojanapalli.